Microsoft stocks marked 304 performance over the past 5 years and are positioned to be a strong leading growth stock in the coming years for some reasons. In our video today, we present to you the ultimate reasons you should buy Microsoft stock and what you need to know about MSFT earnings. So, the first reason Microsoft is ultimately a buy is its enormous gaming and metaverse market opportunity. In January 2022, Microsoft announced its intent to acquire Activision Blizzard, a deal worth $70 billion. This deal aims to increase Microsoft's share of 3 industries, 2 of which are very large and instrumental to the company's growth, attracting significant investment from all over the world. According to IBISWorld, the video game industry, worth $40.9 billion, enjoyed a 27.5% net profit margin in 2021 and is forecast to grow at a 5.6% annual rate by 2026. When it comes to the metaverse industry, the story is the same. As businesses continue to leverage augmented reality to reach customers via avatars, bots, and other digital surrogates, the metaverse is expected to hit $21.7 trillion by 2030, with a compound annual growth rate of 38.6%. Note even as we proceed that this video is not in any way considered professional or financial advice. Do well to make your own research before investing. Once much focus is directed towards the gaming industry, there is a potential dominance by the tech giants over the industry. How does this work for buyers? Let us tell you in a bit. The second reason you should buy Microsoft stock is its positive net present value. The net current value is the difference between the present value of cash inflows and the present value of cash outflows over time. It is used to analyze the profitability of a projected investment or project. A positive NPV indicates that earnings obtained by a project or investment discounted for their present value exceed the anticipated costs. An investment with a positive NPV is projected to be profitable. Microsoft's deal with Activision represents most of its cash and a small proportion of its market capitalization. It could generate a positive net value of $4.4 billion. CNBC reported that the purchase price amounts to 85% of its cash and short-term investments and 3% of its $2.3 trillion stock market capitalization. In 2020, the tech giant assured that with its 7.5% weighted average cost of capital, it could maintain a 10-year average annual growth rate in free cash flow of 25%, which is the rate at which Activision's revenues grew. Redmond, Washington-based Microsoft already controlled 23.9% of the video game software market in the United States, and adding Activision's share would boost the combined companies. The deal could increase the market share of the Microsoft Xbox gaming platform, but even more so, the most critical way this deal would make both companies better is how Microsoft would improve its products. One gamer, Chris Nobriga, told the Times that after playing World of Warcraft for over 11,000 hours, he lost interest as popular developers had left Activision and the company reused in-game systems. With the introduction of Microsoft and the official approval for the deal, Microsoft might be able to dominate the video game software industry. Microsoft is projected to earn more in a few years due to its cloud service. Azure cloud services, which have become a crucial aspect for the tech company, are one of the reasons you should consider buying Microsoft stock. We'll tell you about Microsoft's cloud computing service. So click on the subscribe button down below to get all the stock info you need. CEO of Microsoft, Satya Nadella, told investors, "Together, our ambition is to bring the joy and unity of gaming to everyone on the planet." Investors seem pretty optimistic about the integration of the companies, indicating that this will make up for some of Microsoft's weaknesses. According to the journal, Activision CEO Bobby Kotick will likely depart after receiving his cash. This will help Microsoft appoint Xbox chief Phil Spencer to be CEO of the merged companies. According to Verge, he is already setting up the organization needed to run the combined companies and is looking to integrate the company's cultures as well, respectfully. Do you think this merger will be a major boost for MSFT earnings? Tell us what you think in the comment section down below. Microsoft Azure is a cloud platform that offers developers, IT professionals, and enterprises various services, web applications, and a range of other computing needs. After tripling in revenue for the past 3 years, this is so far Microsoft's fastest growing business. The Intelligent Cloud unit continues to make significant strides and is looking to become Microsoft's biggest source of revenue. Microsoft expects to generate sales of $49.75 billion, up 10% year over year for the current quarter. That is based on the midpoint of its guidance. Let's hope it only gets better as things continue to look rosy for the tech giant. check out our video on why top investors are rushing to buy Microsoft stock, MSFT stock review and analysis for more. Thanks for staying with us. We'll catch you next time.